Hello viewers, welcome to my channel. I'm Hasham Ali Khan. Now I'm going to start the main problems on financial statements of a manufacturer. So far I have completed 20 short questions and MCQs on this topic of financial statements of a manufacturer. Before this I've explained in two videos what are the different provisions regarding the preparation of financial statements of a manufacturer. They will prepare manufacturing account. This account is prepared to find out the cost of production. Only direct costs and indirect costs incurred in the factory will be taken to calculate cost of production. After calculating the cost of production, we'll go to trading account to find out the gross profit. After finding out the gross profit, we prepare the income statement to get the profit for the year. That is the procedure. So the only new point is we are required to make the manufacturing account. So already if you have watched all the 20 short questions and MCQs, you are in a position to prepare the manufacturing account. Now I'm going to start the main problems on manufacturing account or financial statements prepared by a manufacturer. But before starting the main problem, I expect my viewers to have a printout of the problems which I have given in the link under my description. So always keep ready the problem. Take a screenshot of the solution of first three main problems from the board. Then I'll explain all the points in detail. Now, see the first main problem. The Little Teapot Company makes equipment for cafes and restaurants. It was formed on 1st January 2017 by Ismail Nasset. The following information was extracted from the books at the end of the first financial year. So a new business is started, Little Teapot Company, on 1st January 2017. The first year ends on 31st December 2017. So during this 1 year period, what are the transactions? The following information was extracted. Revenue 2,51,400. Then purchase of raw material 98,500. Direct wages 56,400. Indirect factory wages 22,400. Factory general expenses 7,990. Factory fuel and power 3,700. All direct and indirect costs are given. Then at 31st December 2017, the following additional information was provided at the end of the year. Some additional information. Fuel and power accrued amounted to 250. Accrued means due but not paid. So how much are the fuel and power charges already paid? It is given. Factory fuel and power 3,700. So 3,700 already paid. And how much is accrued? 250. So this 250 we will add up to 3,700. So 3,700 paid and 250 due. We add up both and take the total. Then direct factory wages accrued amounting to 850. How much are the direct factory wages paid? It is given the direct factory wages paid 56,400. To 56,400 you add up 850. We'll take the total. Then inventory was valued at raw material 3,300, work in progress 2,120, finished goods 5,810. These are the inventories at the end of the year. At the beginning of the year there is no inventory because it's a new business started. So only closing inventories are given. Factory machinery was valued at 19,550. It has been purchased for 24,000 on 1st January 2017. The beginning of the year, the value of the machinery was 24,000 and end of the year, its value is 19,550. So subtract 24,000 minus 19,550. You will get 4,450. That 4,450 is the depreciation on machinery. There were no other purchases or sales of machinery during the year. That's all. Now A point. Prepare the manufacturing account of the Little Teapot Company for the year ended 31st December 2017. So first question, you are required to make the manufacturing account. And secondly, prepare the trading account for the Little Teapot Company for the year ended. So we are required to make two accounts. First account, manufacturing account, and the second account, trading account, to find out the gross profit. So first of all, we go to make the manufacturing account. See carefully. Little Teapot Company manufacturing account for the year ended 2017, 31st December. We take the direct cost and indirect cost. Direct cost consists of direct material, direct wages, and direct expenses. So first of all, raw material. Purchase of raw material. Remember, there is no opening stock of raw material because it's a new business. So only purchase of raw material 98,500 given in the problem. From this purchase of raw material, subtract the closing inventory of raw material. It is given the closing inventory of raw material 3,300. So subtract 3,300. The 95,200 is called material consumed. To material consumed, we add direct labor, direct wages. The factory direct wages are given 56,400. Factory direct wages paid are 56,400. How much are the factory wages unpaid, due but not paid? 850. 850 are due. So we add up 56,400 plus 850, it is 57,250. These are the total wages, direct wages. We don't have any direct expenses. So simply we add up material consumed plus direct wages, will get the prime cost. So material consumed 95,200, direct wages 57,250, add up 152, 450 is the prime cost. To prime cost we add indirect factory cost. Indirect cost incurred in the factory, that will be added. So here factory wages. Factory wages are directly given in the problem. Indirect factory wages 22,400. Then factory general expenses 7,990. Then factory fuel and power, that is paid 3,500, 3,700, and then accrued 250. So 3,700 plus 250, 3,950. Machinery depreciation, that is 24,000 minus 19,550. Beginning of the year 24,000, end of the year 19,550. So difference is the depreciation. So 24,000 minus 19,550, 4,450. That's all. These are all the indirect factory cost. To add up all the four amounts, you will get 38,790. Now you add up the prime cost and the indirect factory cost. Prime cost 152, 450. Factory indirect cost 38,790. So total cost is 1,91,250. From this total, if opening WIP was given, we would have added, but we don't have opening WIP because it's a new business. But closing WIP we should deduct. It is given the closing work in progress is 2,120. So deduct 2,120, 1,89,120. This is the production cost of goods completed. This is the production cost of goods completed. This is the first problem on manufacturing account. Same method we have to follow in the coming problems wherever we are required to make the manufacturing account. Now second question is asking you to prepare the trading account. This is the trading account. Trading account for the year ended 31st December 2017. First of all, we'll take the revenue, sales. The revenue is given 2,51,400. So 2,51,400. From revenue, we deduct cost of sales. In cost of sales, we begin with opening stock of finished goods. But in our problem, we don't have opening stock of finished goods. We have closing stock. So first of all, we'll take production cost of goods completed. This is the production cost of goods completed, 1,89,120. From this manufacturing account, I am carrying it over to trading account. From this, we deduct closing inventory of finished goods. We don't have opening, but we have closing. So minus closing inventory of finished goods 5,810. Deduct, will get 1,83,310. Now subtract. revenue minus cost of sales. 183,310 is the cost of sales. So sales minus cost of sales will get the gross profit, 68,090. That's all. This is the first main problem on financial statements of a manufacturing concern, where we have prepared a manufacturing account and also we have prepared a trading account. Next problem. Problem number 2. Gideon Fleetwood is a manufacturer of plastic parts for motor vehicles. He provided the following information. 1/4/2016 is the beginning of the year and 31st March 2017, this is the end of the year. The beginning of the year, end of the year, values are given. Raw material, opening raw material 18,230, closing raw material 21,450. Work in progress, opening 15,680, closing 14,120. And opening finished goods 56,905, closing 43,140. The opening and closing values of all inventories, 3 types of inventories are given. For the year ended 31st March 2017, sales revenue of finished goods. It is simply revenue. This will be taken in trading account. Purchase of raw material, purchase of finished goods. Then factory direct wages paid, factory general expenses. Next page. The following additional information is available on 31st March, end of the year. Factory direct wages accrued amounting to 5654. This accrued direct wages will be added to direct wages paid. The factory general expense include insurance on the factory which is prepaid. The factory general expenses include prepaid insurance. The prepaid will be deducted. So this 232 will be deducted from factory general expenses. The factory machinery was valued 78,400. On 1st April 2016, the factory machinery was valued at 1,12,000. Additional machinery costing 28,000 was purchased during the year. There were no sales of machinery during the year. Depreciation is to be provided at 15%. That's it. Now, state the basis on which Gideon Fleetwood should value his inventory. First question. What is the basis on which the business will calculate the value of inventory? Second, name one accounting principle Gideon Fleetwood is applying by valuing his inventory. What is the accounting principle applied? Third, prepare the manufacturing account of Gideon Fleetwood for the year ended 31st March 2017. Last one, prepare the trading account to gross profit of Gideon Fleet for the year ended. Just like the previous problem, we have to make manufacturing account, trading account. Manufacturing account is prepared to find out the cost of production of goods completed. And trading account is prepared to find out the gross profit. But before that, 2 theory questions it is asking you. Which accounting principle? Well, first of all, inventory is valued. How the inventory is valued by a manufacturer? So accounting principle is the inventory should always be valued at the lower or of cost or net realizable value. Remember this point. The inventory will be valued at the lower of cost price or the net realizable value or simply market price, whichever is lower. That is the principle. So inventory is valued at the lower of cost or net realizable value. First question completed. Second question. Which accounting principle is applied in valuing the inventory? Remember, for valuing the inventory, we are following the principle whichever is less, cost or realizable value. Why we are applying this principle? Because we are following prudence accounting principle. According to prudence accounting principle, the profit should not be overstated. That means if there is an expected loss, provide the expected loss, but don't record expected gain. The prudence concept says if there is a loss, we should provide it. So the accounting principle applied in valuing the inventory is prudence concept. The accounting principle applied in valuing the inventory is prudence concept. The first A and B bit completed. Now I am going to start the manufacturing account. So here manufacturing account for the year ended 31st March 2017. First of all, we'll take raw material. In our problem, opening stock of raw material given. So take the opening inventory of raw material. Opening inventory of raw material is 18,230. 18,230 is the opening stock of raw material. To this we add the purchase of raw material. It is given in the problem. Purchase of raw material 285,880, add up 304,110. From this deduct the closing inventory of raw material. The closing inventory of raw material 21,450, subtract 21,450, material consumed 282,660. So first of all, material consumed is not given. So remember how to compute the material consumed. Opening inventory of raw material, add purchase of raw material minus closing inventory of raw material. We'll get material consumed. To this we add direct wages. It is given in the problem direct wages 1,87,008. Add up both 463, 368. This is the prime cost. Material consumed and direct wages. We don't have direct expenses. If there is direct expenses, we would have added, but we don't have. So we got the prime cost 463, 368. Now to prime cost we have to add indirect costs. The indirect cost means those expenditure incurred in the factory, but without specifically incurring on a particular product, but it is incurred on all the products produced in the factory. So what are those general expenses? The general expenses are how much given in the problem. See here, general expense 123,725. 123,725. But in the problem it is given, general expenses include prepaid insurance. Prepaid insurance is how much? 232. So subtract 232. Here we have written general expenses. So below general expenses you can write down general expense are 123,725. 123,725 minus prepaid insurance is 232. Minus 232. You will get 1,23,493. Right? Then machinery. Machinery we have calculated 21,000. How 21,000? Last line it is given 15%. The additional on 1st April 2016, the factory machinery was valued at 1,12,000. Additional machinery 28,000 was purchased. So add up 1,12,000 plus 28,000. So it comes to 1,40,000. 1,40,000. So 15% of 1,40,000. 1,40,000 into 15%. You will get 21,000. So here you can write down 1,40,000 into 15%. You will get 21,000. Clearly given. Beginning of the year machinery was 1,12,000 and additional machinery purchase during the year is 28,000. So if you add up 1,12,000 plus 28,000, 1,40,000. 15% of 1,40,000, 21,000. These are the two items. Add up these two, you will get 1,44,493. Then you add up prime cost plus indirect factory cost. You will get 6,07,861. To this, we have to add the opening WIP and subtract the closing WIP. So opening work in progress 15,680. So 15,680 you add up, you will get 623,541. From this we deduct the closing WIP. Closing WIP 14,120. Subtract 14,120, you will get 6,09,421. This is the cost of production of goods completed. Cost of production of goods completed. Now I am coming to the trading account. Trading account for the year ended 31st March 2017. Now we'll begin with revenue. Revenue means sales. It is given in the problem. Sales revenue are 9,15,000. So I have taken sales revenue. From sales revenue, deduct the cost of sales. How to find out cost of sales? Opening stock of finished goods. In the problem it is given. Opening stock of finished goods 56,905. So opening inventory of finished goods 56,905. To this we add production cost. Here it is given production cost of goods completed 609,421. We have taken 609,421. To this we add purchase of finished goods. Sometimes it will be there. Sometimes it will be there purchase of finished goods. Here we are given purchase of finished goods are 12,555. So remember Opening stock of finished goods, add production cost, add purchase of finished goods. Take the total 678,881. From this, subtract the closing inventory of finished goods. The closing inventory of finished goods are 43,120 given in the first paragraph. Closing inventory of finished goods 43,140. Subtract. We'll get 631,741. This 631,741 is the cost of sales. So revenue minus cost of sales, we will get the gross profit. So gross profit we got 2,79,259. That's all. So in this problem, we have prepared the manufacturing account and we have prepared the trading account. Manufacturing account is prepared to find out the cost of production, whereas trading account is prepared to find out the gross profit. Remember the procedure, what are the items to be added, how to proceed, right? In the first instance itself, you may not be able to understand. So watch the problem twice, thrice, and always keep a notebook beside you, pen, calculator. So always when I give the lecture, you should closely watch it and write it down the points. Then only you can be able to get the maximum from these videos. Now, next, problem number 3. Third problem, Jola owns a small scooter manufacturing business in Dhaka. Dhaka is in Bangladesh. He has managed to produce the following balances. Taka. Taka is the currency of Bangladesh. So direct labor 52,330, indirect labor. Direct labor is a direct cost, whereas indirect labor is an indirect cost which will be taken under factory overhead. Raw material on 1/1/2017 opening. Then raw material on 31st December 2017 closing. So opening stock of raw material, closing stock of raw material given. Purchase of raw material is given. Patents. Patents are the direct expenses. Patents are direct expense. Calculate the prime cost for Jola. It's a very easy problem. Only it is asking you to calculate the prime cost. How to find out the prime cost? Jola, calculation of prime cost. Raw material consumed. Opening stock of raw material, add purchase of raw material minus closing stock of raw material. We'll get material consumed. So here opening inventory 6,000, add purchase 82,494, total 88,494 minus closing inventory 17,366. Deduct, you will get the material consumed. So material consumed we got 71,128. This is the material consumed. To this we add direct wages. So direct wages are given 52,330. It is given direct wages plus direct expenses. The direct expenses are the patents. So patents are direct expense 3456. Take the total of material, wages and direct expense 1,26,914. This is the prime cost. So in this video I have explained you the three main first problem on financial statement of manufacturing concerns. So first and second problem we have prepared the manufacturing account and trading account. Third problem is small problem where we have calculated only the prime cost. So if you want the perfect knowledge, watch all the videos from beginning till end. Then only you can be able to get the complete command. Don't join in between, don't skip in between. First you watch the theory videos, then you start the problems one by one. Definitely you can get good command on this topic of financial statements of a manufacturing concern. Inshallah, we will continue the next problem in the next video.